Hello everyone. So in this video, I'm going to share my complete investment journey from 0 to 2.5 crores in present value. As you can see on the screen, I have invested around 2 crore rupees in my Zerodha console, and the present value of my investments has grown to 2.5 crore rupees. So 2.55 to be precise, which is a 29% increase. And overall, I've been asked this question a lot about XIRR. This has been the last 7 years of investing for me. And let's just see what the portfolio XIRR is, which is 19.44%. So that's the XIRR that I've got over the past 7 years on my portfolio. Now, I am very happy with these numbers, and the way that I've designed my portfolio actually helps me sleep better at night. I don't have to look at individual stocks, and I'm mostly an index investor. So I'm going to share my entire journey with you. But before that, let's look at the portfolio quickly, because I know a lot of you are waiting to get your eyes on the portfolio and what it looks like. So this includes all of my investments and on Zerodha, of course, which is your equity, your debt, your mutual funds and gold investments. And as you can see, 53% of my portfolio is in ETFs, which are exchange traded funds. Basically investing in the index. You could also do this using index funds. I prefer to do it through ETFs. It's just something I enjoy doing. Honestly, if you look at the pros and cons, for most of you people, an index fund alternative would be a better way to invest in the index. And I completely agree with that. So don't see everything on the screen and decide you're going to do exactly the same thing. This is not personal finance advice. This is just how my journey has been and the ways that I invest. But in these videos, I like to share my perspective on things so that you can get a unique perspective, outside of all the content out there on YouTube, which is a lot of it talking about buying individual stocks. And the main reason for that is that YouTubers will run very soon out of business if they just tell you to invest in the index, because there'll be no content to produce on YouTube. And every video talking about a new stock, you waking up every morning looking at the news, is how the entire media consumption cycle keeps you in the loop. And luckily for me, I don't have any financial news app on my phone. I don't read news online. I don't have to see what Reliance is doing, what Infosys is doing. So for me, the clarity, the mindset, the peace of mind, spending time with my family, growing my business is all way more important than getting a few points extra return. And honestly, whatever XIRR I have, I don't try to compare it with anyone, except yes, inflation to some extent. As long as I'm following the market, I'm very happy, right? Over the past 7 years, I've been very happy with this kind of return. So how is this investment done? Let's look at the biggest portfolio. So we could just sort it by the present value. So my top 3 holdings are Nifty 50, Nifty Next 50 and Midcap 150. So this is a very boring portfolio for some people, but this is what I enjoy, right? So if you were to list all of the companies in India, the top 50 companies are your Nifty 50. That's where I invest with this. So that's around 30 lakhs. Then on the same list, the next 50 biggest companies of India is your next 50, which is again around 30 lakhs. I have equal investment in these two because I feel the next 50 will potentially become, some of those companies will move up the list, right, as they become big. And they have a little bit more potential to grow as per me than Nifty 50. And as you can see, overall, my P&L change on this also reflects my theory so far. So it's like a 51% increase versus Nifty 50, which is a 33.4% increase. Then finally, we have the next 150 companies. So if you just keep moving down the list, the next 150 companies gets 26 lakhs of my money. Now, I often would look at these numbers and say, this is how I wanted and this is how it ended up. So I wanted to put 1 crore as follows: 30, 30, 30, and then 10, right? So 30 lakhs in Nifty 50, 30 lakhs in Next 50, 30 lakhs in Midcap, and 10 lakhs in Nasdaq 100, which has now become 17 lakhs. So all I do in my portfolio to rebalance is go in once in 6 months or once in a year and move this money around to sort of get it back into the 30, 30, 30, 10 split. Right? That's all I do for rebalancing. And sometimes I'll do it over a long period of time. So I'll do it once in a week or once in a month. But overall, I have no rush. I take my time to make any changes to my portfolio because my portfolio is a very safe portfolio, right? So as per my risk appetite, it's actually safer than even my risk appetite, right? So that's what I prefer. That helps me sleep better at night, like I said. So those are my top biggest holdings. As you can see, for small cap, I don't have the index. I have a mutual fund, which is Canada Robeco Small Cap Fund, which has around 22 lakh rupees. Then the Nasdaq 100, which is 17 lakhs. I might trim this a little bit, but given that my portfolio size has grown to 2.5 crores, I think this is okay. It's still less than 10% overall of the current value of the portfolio. Then for Midcap, I also have another mutual fund, which is PGIM India Mutual Fund, which is around 13 lakhs. Then we have the S&P 500 Index Fund, which is around 13 lakhs. So the NASDAQ 100 and the S&P 500 give me international exposure. Then we have the gold ETF, which is 10 lakhs. Below this, there are some funds which I'm entering, some which I'm leaving. So I wouldn't really care about things which have less than 10 lakh rupees on a regular basis. So all I'm managing is anything which has above 10 lakhs of investment for that particular fund. So I'm not saying go ahead and invest in exactly these things. In fact, for example, PGM India, I don't invest in it anymore. As you can see, I'm moving slowly to Kotak Emerging Equity Fund. But I've made separate videos on all of this. I've made separate videos on the best ETFs that you can buy, large cap, no actively managed mutual funds for large cap for me. I've also made videos on the best mid-cap mutual funds, the best small-cap mutual funds based on my analysis, of course. There's no one best answer for this, but these are my analysis and how I study these funds. So you can find all of those videos. But this video is more about the journey, right? So now let's go back 4 years. So this video was uploaded by Scriptbox on YouTube, and it's got 5.8 million views 4 years ago. And I wanted to show you this quote. You can obviously search and watch this video. I wanted zero stress about money. Like, that's been my mantra related to money since forever. So I've been investing since 7 years, and my mantra 4 years ago was exactly the same as my mantra now, which is why 4 years ago I was basically just investing in actively managed mutual funds, large cap mutual funds, which were provided by Scriptbox, which I soon realized are not a good option compared to index funds for large cap investment. So I stopped doing this after a certain period of time. I do want to share this because a lot of people still watch this video and message me or ask me what's happening with this portfolio. I have completely exited my actively managed mutual fund portfolio. So this is the first time I'm actually announcing this. I have been saying this in all videos, but yes, I have completely trimmed down my position on Scriptbox, except a certain amount which is still in the exit load period. So as soon as it comes out of exit load, I'm going to completely close my Scriptbox investments and close my account as well. So just remember, I'm not a brand ambassador for Scriptbox. It did help me in a certain phase of my journey, which is when I made this video with them, and I did enjoy that process. I did get returns. All good things about Scriptbox, but at the same time, I'm not a current investor in any of their funds, right? So then I moved to direct funds through Coin, and at that time I was not even aware of the differences between an actively managed large cap fund versus an index fund, which will sometimes even beat the performance with a very low expense ratio, which is why I actually decided that for my large cap investments, it's all going to be index. But what I'm trying to get here is, if you watch this video, you'll see that 4 years ago, I had saved up 25 lakh rupees. So what that means is, in the last 4 years, I've built my portfolio from 25 lakhs to 2.5 crores. So that's the jump I've seen in the last 4 years, right? Now, if you guys were to think that you can start investing 25 lakhs and it's going to become 2.5 crore rupees, that's not true. It's because I make online business, I make money from my business, and I put that money in my portfolio. The returns have only been 57, 58 lakhs, right? So of all the money that I've put in, which is 1.98, from 25 lakhs to 1.98 crores in 4 years has been my journey, right? And the rest, the market has given back to me. So 58 lakh rupees in the last, probably around 4 or 5 years, the market has given back to me, right? So now let's go to the dashboard, okay? So this will give you more clarity of the entire journey. So let's just zoom out, and let's see when everything started, okay? There has been crazy times in between. I'm not perfect. I also panicked a lot during the lockdown, sold a lot of stuff which I shouldn't have, did a lot of swing trading before that which is this peak. So we are starting here in 2020, moving the money from Scriptbox, from actively managed mutual funds in 2020 to my Zerodha portfolio, right? And then now we are looking at this big jump. A lot of it is because of swing trading. And then there is a crash, and I'm sure a lot of people have seen this in their journey as well, which is as expected in 2020 end. Then there's another one, and then finally you can see that consistently I've been investing since September 2021. It's been a consistent investing game, investing journey where I have been investing mostly into ETFs. This is why you see the yellow line, which represents mutual funds, has been more or less the same. And even I sold out some of those units. While the green line, which is the equity holdings, which basically means your kite versus coin, right? So everything on kite has been increasing over time. So this is the time where I really went into ETF investing, index investing, and specifically ETF investing. Now, as you can see here, I've come back to increase my mutual fund holdings a little bit more by having some SIPs, some new SIPs in these mutual funds, right? So this is how it's split. Out of the 2.5 crores, as you can see, 1.8 is in my equity holdings and 70 lakhs is in my mutual fund holdings. That's how I split it. Okay. So what this means, a few learnings from my journey that you can take away. The first thing is you will learn over time and you will make changes over time. So if you watch my videos, like after 5 years, I might be doing a completely different strategy of investing. Fundamentally, I think now I have arrived at a place where I will stick to index investing, but you should not be surprised if after 2 years I'm doing index funds instead of ETFs because they are more convenient. For example, right now I have the time to deal with ETFs. I like to deal with ETFs, so I deal with ETFs. I might move my money to index funds. It doesn't matter. I might move all the money to index funds because it's exactly the same fund. It's just managed differently. It's a different instrument to get to the same place, right? So that's something that you might see. So don't be surprised. The strategy, the fundamental remains the same, but things will change. And this is true for anyone that you see online, which is why a lot of people shy away from sharing this portfolio. A lot of YouTubers, which I've consulted, I've paid to get on consulting calls with, will talk about all kinds of things on their YouTube channels, but their portfolio looks completely different. And it's not wrong. It's not something bad that they are trying to do. It's just that life happens, right? You make wrong decisions. Sometimes you have an exit load, or sometimes you can't change things up very quickly. So you'll just let it be. There are funds that I've invested in. I'll show you coin right now. There are funds that I've invested in that I wish I never invested in before, right? So let's look at the Greater China Fund, for example, right? I invested in this fund. There was a time when all economies were crashing and China was going up. I invested this 2.2 lakh rupees. It became 1.47 lakh rupees. Of course, in a grand scheme of things, it's not taken away from my money or my portfolio. But if you look at it as an individual investment, it was a failed investment, right? So we have to be open to admitting that all of us make mistakes. And that's why I'm very happy to share my portfolio so that you can get this lesson that we all make mistakes. Another thing that you can see in my journey is I sold out equity, holdings very soon. Market crashed, they became down, but I also sold. I didn't sell everything. I did sell some stocks, which I could have kept, which would have come back again. I had most of my money in L&T back then, and it came back really strong. L&T came back really strong. It's right now 109% up on my portfolio. Tata Motors 113% up, Bajaj Auto 115% up. I had solid companies, and I got scared because this is the first time in my life where I saw a dip, and there are way more experienced investors than me who did exactly the same thing that I did. So I'm not sure if people are learning from the experience, but I definitely have learned. This is the only thing that I think that separates or makes me get an edge, is because I just make the mistake once and I try to not repeat it again. And I think that's something, again, that you can take away from my journey. I don't think that investing in actively managed mutual funds was a mistake, but I never repeated that again. In the past 4 years, I've not done that. So that's how the journey has been. So my portfolio right now, exactly what I'm doing with my money. And I will keep you posted with these videos from time to time because someone requested to share the journey. This is how it's been. Now we come to the final part, which is the most important thing, is to actually make a lot of money. And that's really the key to all of this. The 58 lakhs returns would have never happened if I didn't have 1.89, if I didn't make that money over time to invest in the portfolio, right? Because of course, some people might get some inheritance and all kinds of things, and they could do a one-shot, all of that kind of stuff, or they could break it down into investments. But for me, it had to come from some sort of business. So I built an online business. I run a digital marketing agency. We do services, and all of the profits that I left from my agency that I take as salary, I would then put that money consistently every single month into either my SIPs on my mutual funds on Coin or into the index on Kite. And that's basically the process that I keep repeating over time. So money is made by making more money and then putting it into investment. And I don't subscribe to the view that you make money by short-term trading. I have done swing trading in the past. I've never done day trading, and I just don't like it from a perspective, just from a theoretical perspective as well as practical perspective and examples of my friends and connections and so forth. I don't like it as a concept. Swing trading I did do from time to time. During the pandemic, I actually made a lot of money on some of the stocks with swing trading. I wouldn't name them because now I'm not into swing trading and it doesn't matter what happened in the past. But my learning has been, as I became a father, I realized I just want to use all my time to spend with my daughter, and instead of spending that time looking at charts and stocks. And that's one key takeaway that I want you to think about. Life is going to happen outside of these charts. So if you're ready for life, if you want to go to the beach, if you want to spend time with your family, then I feel, as per me, at least for me, this works really well. Index investing is the approach that I've taken. Fundamentally, I'm going to stick to index investing, whether I change the vehicle or not, whether I change the instrument or not. My core portfolio is going to be the index. My satellite portfolio might change. And that's the core and satellite concept. So those are a few learnings, and hope you enjoyed this video because you had requested for me to share my journey. And if you want more of these, I could do a check-in once in 6 months and share updates with you as well. So just let me know in the comments so that I know that you enjoy this kind of content. Thank you so much for watching. I'll see you in the next one. Bye.